What if I told you the only reason the stock market hasn't crashed yet has nothing to do with earnings, nothing to do with investor confidence, and absolutely nothing to do with soft landing? There's one force holding everything up, and almost nobody is talking about it. Let me show you. Right now, the market looks calm on the surface. The indexes are flat, tech stocks are holding, and volatility feels low. But this calm is deceptive, because underneath it, we're watching the tightest financial conditions in 20 years, the highest real interest rates in decades, and the most delayed reaction from markets we've seen since 2006 to 2007. So the real question isn't, why isn't the market crashing? The real question is, what is artificially holding it up? The hidden support, institutional positioning. Here's the truth most people don't realize. Markets aren't rising because of optimism. They're rising because of positioning pressure. Big funds are still heavily allocated. Pension funds must stay invested. 401k flows continue no matter what. Passive index funds keep buying automatically. This isn't bullishness, this is structural buying. A machine that buys, even when it doesn't want to. That's why the market hasn't cracked yet. Liquidity, the real reason we haven't crashed. Now, here is the actual core. Even in a high-rate environment, there is just enough liquidity to delay the reckoning. Not enough to make markets boom, but just enough to keep them from breaking. Think of it like a patient who's sick, not healthy, but not dying, because the doctor keeps giving just enough oxygen to survive. That's the market right now. What happens next? The part no one wants to admit. And here's what nobody wants to say publicly. Markets don't crash when things are bad. Markets crash when the final supporting force runs out, when liquidity dries, when institutional positioning flips, when fear overtakes automatic flows, when one piece snaps, and the whole system realizes it's been held up artificially. This isn't doom. This is just how cycles work, and we are deep in one of the most delayed cycles of the last 30 years. What smart investors do now. So if you're watching the market right now thinking, something feels off, you're right, because this is the moment where observation beats prediction. Smart investors aren't trying to guess the crash. They're preparing for the moment the last support quietly disappears. And when it does, the people who understood liquidity, behavior, and timing will be the ones positioned correctly. If this helped you understand the market differently, subscribe, because the next episode will break down exactly what will signal the first real shift before it shows up in price.